Markets with the most weekend risk, Mikey. We're going to have a little bit of fun here today. You have actually already looked through the slides, so it defeats the purpose if I were to create a guessing game with you on what you thought was the market with the most weekend risk. But everybody at home can play on their own. First, let's acquaint them with the idea here of what weekend risk is. It's just a matter of what happens to your positions over the weekend. Now, Mikey's a big crypto bro, and he trades markets that are never closed, which is a really intriguing idea. I think a lot of markets are probably going that way, but the majority of markets, all of them, so to speak, outside of crypto, Mikey, they all go to sleep over the weekend. And it's this idea of wondering, like, what happens between Friday, if you've got, maybe you're short or long a market at $100, what's going to happen by Monday? It's kind of off-putting, isn't it?
Yeah, it's a little scary idea, especially if you're new to markets. It's like you can trade Monday through Friday, these set hours, but then the weekend hits and there's nothing you could do. And news is coming out pretty much all the time outside of the traditional work week. So, those stocks are like, in a sense, their value is changing, but you can't go to your platform and open or close or hedge your position. So it does create a little bit of a sense of worry, especially for people trading. I think commodities tend to be most subject to this type of risk. And in crypto, it's like the anxiety continues because you can check your platform, but at least you can do something. You could close or you could reallocate or move your portfolio around, but those price feeds are always coming in.
Yeah, it is this idea of like there is still news coming out throughout the weekend, obviously, and it's usually, unfortunately, the most tragic type of stuff that can come out over the weekend, because for the most part, if it's like run of the mill financial BS, like, oh, so Elon Musk is talking about whatever, like stuff like that usually is within business hours. Like there's not a lot of stuff, not a lot of times where like a Fed chairperson is going off on a Saturday afternoon like that. That's kind of weird. So most of the stuff is within the week, but yeah, anything can happen over the weekend. And it is a little bit off-putting knowing like, all right, it's Friday afternoon. I'm long or short equities or crude oil or interest rates. And I hope, and this is also as a side note, whenever the idea is like, I've got this thing going into tonight and I'm going to go to sleep, or this weekend and markets are going to be closed, and I hope it's going to be better by the time that markets are open, that's usually a bad thought. But I wanted to commit some research, Mikey, to this because anecdotally, a lot of people will probably think about stuff like, oh, back on the 17th, the stock market went out, looking at small stocks futures, went out at about 80.84 on Friday and then opened all the way down at 78.02. I lost more than $2, Mikey, $200 per contract, and I could do nothing about it over the weekend. I mean, it is a scary thing, but I want to put not anecdotal evidence, but historical data for the last year or so behind all of this stuff, because this is real. I mean, this is weekend risk that definitely, I fancy myself a day trader who closes almost all positions going into every single night because I want to avoid some of this stuff, but I also want to be reset for the next opening. And this stuff is kind of freaky, right?
Yeah, absolutely. I mean, this is more than $1 move in this product, which is $100 in your P&L for a single position. But I mean, what can you do, right? Your options are to close the position and not hold. Let's say the thing moved upward and it moved in your favor. I mean, you're never really going to know there. So you can take the position as Frank does and close out those positions at the end of the day and know that you're only going to trade defined hours when you can open and close actively and new market info is coming in. Or if you're taking a more medium to long-term approach, you have to kind of hold it through the weekend.
And that's exactly right. You snuck a great point in there, which isn't to say the rest of the stuff you said was awful, but you snuck a particularly good point in there, which is like, yes, over the weekend risk and the market being closed smacks of like, oh man, like this could be bad. I think some bad stuff can happen, but more than, not more than, but 50% of the time, usually it's going to be higher, right? Like 50% of the time it might be lower, but it's this idea that is essential to a lot of mathematical theory, which is like time is continuous And like every moment, the market could be higher or lower. It could be in the direction you want it to be going or against you. And the weekend is kind of just another moment, right? Like the weekend doesn't necessitate like, oh, downside in the market every week. Only bad stuff can happen over the weekend. So you're exactly right that like at the end of the day, it's a 50-50 shot. It's the same as like if you went out to lunch on Tuesday afternoon between 12 and 1 and you didn't check your platform, like it's probably around the same amount of risk. But I did want to look at the exact amount of risk between, day-to-day movement and Friday to Monday movement. And to start off with that, Mikey, I just have here the standard deviations in percentage terms for a bunch of the major asset classes. You've got the stock market and the SM75, the 10-year interest rate, S10Y, SPRE is your gold and silver market, SFX is US dollar, SMO is crude oil. And then I threw in there the crypto market because I wanted to kind of have a control almost because crypto's open Saturday and Sunday. And so I was like, man, let's compare this to a market that is open over the weekend and look at what the weekend risk is in that market. Now, what would you think? I know you've seen the results, but try to go back in time here and tell me which of these markets you think would have the most weekend risk.
Okay. Well, first looking at these numbers on first glance, I mean, this is just your volatility, how much the thing actually moves. My expectation is that the markets that are most subject to weekend risk are going to be commodity markets and crypto markets. And I say that because stocks are most affected by the news week. I mean, as you mentioned, like interest rates are going to move when the Fed speaks. Jerome Powell's not getting in front of people on Sunday morning mass saying he's going to raise rates or whatever it is. Whereas oil is subject to, we had, tanker risk over the weekend. Sometimes this happens where something blows up or there's a leak somewhere, or OPEC does sometimes carry meetings into the weekend there because there's international hours. Same with Bitcoin. I think it's more subject to what I would call like outside of the traditional news week risk, which could be like a development deployment or a big crypto influencer per se getting up on Twitter and pushing something out. So I would lean to oil and cryptocurrencies, both ETH and Bitcoin being most subject to weekend risk. And some of those equities just kind of continuing their traditional volatility on the weekends because not a whole lot's going on the weekends in relation to Apple or Microsoft or whoever.
Yeah, it's a super smart analysis there, which is, like I say with the Federal Reserve, but like you say with like Apple and like the business, obviously the Apple store is open over the weekend, but like the business of most of these companies they're not putting out new information over the weekend because they're not working over the weekend for the most part. And so I think that's a smart assumption. Before we show the results here, I gauged the weekend with the most weekend, the market with the most weekend risk, as being the market that shows the biggest jump in standard deviation in what we're about to see. Because this data, if you look at the SM75 here, the stock market, this data point here of plus or minus 1.4% is just saying, okay, from Monday to Tuesday, Tuesday to Wednesday, Wednesday to Thursday, and so on, just every day, the market tends to move about 1.5 percentage points. And now as we filter all of this data for standard deviations of weekends, what the markets do over the weekends, if SM75 goes from 1.4% on any given day to 5% over the weekend, it's up or down 5% over the weekend. That's a really big jump, and that is a lot of weekend risk. Now let's show everybody the results and see if Mikey was correct or not. You can see here as I jump from close to close of regular days, let's maybe just harp on SM75 there. No change over the weekend here, whether you're closing Tuesday to a Wednesday or a Friday to a Monday there. It's the same amount of action. You look at the S10Y, the interest rate market, it's 0.1% more. You keep going there. You look at metals here. It's It's the same exact thing, 1.1 to 1.1%. US dollars there, the currencies actually a little diminished action over the weekend from a Friday to a Monday's close, which is interesting to me. And it's actually something that our mutual friend, Peter Momat, he says very often is like, he doesn't trade a lot of foreign exchange going into the Friday close because he's oftentimes like, yeah, they'll probably be in around the same spot on Monday. And the data kind of shows that. Now, as we get onto the last two pieces, Mikey, you are indeed correct that crude oil goes from moving about 2% per day on any given day to 3% over the weekend. You can see that jump there. And Bitcoin goes from moving less than 5% on a given day to almost 7% over the weekend. Wow. So commodities and crypto, a noticeable jump in weekend risk.
Wow. I didn't expect Bitcoin to be that significant, actually. And it doesn't really make a whole lot of sense to try and explain it. I'll just offer it as, something entertaining, but maybe it's because it's the only market that's open on the weekends. Like more people are there and trading it. I guess that's really the main reason I can potentially give to it. But from like a tradable takeaway, what's kind of neat is if you have a core portfolio of things like equities and interest rates and metals, you don't have to be too concerned heading into the weekend. The additional benefit if that portfolio is comprised of small products that they're not going to move a whole lot anyway, like 1% on an SM75 future isn't $10,000. It's like maybe 50 or $100. And then if you have exposure in things like cryptocurrencies, you can actually jump into the platform and manage some of that risk and maybe take part in the action that's going on with the increased volatility. Maybe there's a chance for more scalping actually on the weekends. If you're stuck at work midday and you can't trade cryptos because of your office job or something like that, you can be a weekend warrior. It's pretty cool stuff.
Yeah, you're exactly right on all levels there, which is to say that like over the weekend, I mean, maybe a handful of times per year. There's about like 50, 55 weekends every year. Is that about
52? Yeah.
Is that about right? And like 3 of them, there's like significant action where people are like, oh, I got to watch the Sunday night open in futures because some stuff went down this weekend. And the rest of them, you open your platform on Sunday night, or even you wait till Monday morning and you're like, oh, the stock market is like up or down 0.1%. It hasn't gone anywhere until people get back in on Monday morning or Monday afternoon. I mean, I appreciate you trying to lend a reasoning to crypto's jump from 4.9% to almost 7% in activity over the weekend, but who cares, right?
Yeah,
like,
exactly.
I mean, if you were to able to like find, like if Mikey went full economist and was like, it's because liquidity is lesser and retail people are getting in and they're actually selling on the weekends because they have more money Monday through Friday and they buy Bitcoin Monday through Friday and then they sell it over the week. Like I wouldn't care if you had a fully formed idea like that, because it would just be like, okay, well, I'm still just going to know that it's more volatile over the weekend and I can trade it or, what have you.
That is the key point, though, rather than explaining what's behind it, is knowing that there's actually heightened volatility. For a lot of people, it means heightened opportunity. I mean, to go into that market and maybe try and scalp some of that 6.8% from the Friday close to the Monday morning. So I think that's really like the tidbit that is worth something.
Yeah, if you're trading crypto over the weekend, I guess like widen out those. There's probably more opportunities, more. I mean, I remember I was at a bar sometime this year at like midnight or something, and I was literally buying cryptocurrencies with a couple of my buddies because we're not crypto bros, but like the market was maybe I am, I don't know, but the market was down like 10 or 15%. You remember that? Like a
It's a
couple of months
reversion
ago.
play. You saw it extend outside of
Yeah.
what its normal range is. And as you would with any scalpable product, just look to take a contrarian position there and pull a few basis points out of it. I think it's pretty cool that you can do that on a Friday night. And hopefully all markets, I know we're thinking about it here at the exchange, will be tradable 24 hours a day, 7 days a week. And then Frank and I will actually have no opportunity to celebrate the holidays. We'll be trading all day.
That's
every
fine.
day.
That's fine. We don't need anything to do socially or
Sure.
on our own over the weekends. But for most people, though, I would say a considerable takeaway is, and maybe if you've watched the program, you've probably kind of like felt my sentiment on this. Like, I don't like carrying crude oil positions or some of this stuff over the weekend. And this study confirmed it here, but it's more of like weekend risk. You don't have to worry so much about, equities, interest rates, foreign exchange, kind of these markets that are volatile at times, but are not super volatile and have been around for, centuries here, with some of the faster stuff like crude oil, some of the primary markets like crude oil or natural gas, or some of these newer markets like crypto. You might want to reduce your risk going into the weekend. I don't like carrying crude oil overnight, let alone over a weekend. And this information definitely kind of agrees with me on that point. But Mikey, thanks so much for agreeing to be on the program here today. It's always fun, and we haven't been able to do the small stakes in a couple of weeks, right? I think we had last Friday off. It's nice to see you, man.
It's great to see you too, on especially this important day of New Year's Eve. So thanks so much for having me.
I guess. Why don't you give the people actually a real resolution as opposed to the 100 miler is like a good goal, but you're going to accomplish that in what, like a month or so? What's something that Mikey's going to do this year, or something maybe that Mikey's going to stop doing, or maybe someone in your life that you're going to get rid of? Why don't you give us something?
Oh my gosh. Seriously, on the spot. No, a real dedication for me on two fronts is, one, to increase the number of tradable products available at the small exchange. We want to bring you guys so many more new markets. I'm thrilled for the upcoming releases in 2022. And Frank is keen on some of these ideas. And the second goal is to really improve my Japanese fluency. I've been practicing a lot of Japanese language learning, writing, reading, and speaking. So, akemashite omedetou gozaimasu. Happy New Year, everybody. Thanks for tuning in.
All right. Well, you heard it there. I definitely can't add anything to what Mikey just said, but yeah, we will definitely be looking to add a lot of stuff even here in January from the small exchange. I know it's been a while since we've come out with some new stuff here, but thanks so much, everybody, all year for supporting our wonderful young exchange. It's only going to get more exciting and potentially weird here in 2022. So thanks for supporting us, and we look forward to supporting you in the future with even more products and options on products. So look forward to that, everybody. And also look forward to Splash into Futures with Pete Momet coming up next. Thanks so much for watching, everybody. Have a great, happy New Year. Peace.